Before the pandemic, tax rates in Canada were well grounded, with occasional tweaks in response to economic scenarios and government policies. The personal income tax rates were progressive, with higher income brackets subjected to higher rates. Corporate tax rates, on the other hand, differed based on the size and nature of the business. Regulations were in place to guide deductions, credits, reporting requirements, and compliance procedures. Small businesses enjoyed specific tax incentives and deductions to foster entrepreneurship and stimulate economic growth. Traditional tax filing and accounting practices dominated, with a majority of people and businesses depending on in-person meetings with accountants, paper-based documentation, and physical filing of tax returns, though digital tools were available but not widely used. Then came COVID-19, bringing with it a wave of changes. The fundamental tax rates remained intact, but the economic hardship spurred by the pandemic led to the introduction of relief measures. Individuals received benefits such as the Canada Emergency Response Benefit and enhanced tax credits for home office expenses. Small businesses were granted wage subsidies, rent relief, and tax deferrals to alleviate financial pressures. Regulations were revamped to accommodate these relief measures and support programs. New tax credits, deductions, and reporting guidelines were introduced to address pandemic-related issues. Businesses, for instance, could claim additional deductions for COVID-19 safety measures and losses suffered during lockdowns. The pandemic also sped up the digital transformation of tax filing and accounting practices. Remote work became the norm, fostering increased dependence on digital tools, cloud-based accounting software, and virtual meetings. The use of online tax filing platforms soared as contactless solutions became the need of the hour. COVID-19 presented challenges such as delays in tax processing, uncertainties in economic forecasts, and complexities in claiming relief benefits. Yet it also paved the way for innovation and efficiency in tax planning, compliance, and financial management. Businesses found new ways to optimize operations, manage cash flow, and leverage available tax incentives. To sum up, the biggest transformations brought about by COVID-19 include the introduction of extensive relief measures like the Canada Emergency Response Benefit, wage subsidies, and rent relief, which significantly impacted tax planning and financial management. The swift shift to digital platforms for tax filing, accounting, and communication reshaped the industry, underlining the importance of cybersecurity, data privacy, and remote collaboration. Governments demonstrated flexibility in tax regulations, providing extensions, deferrals, and special provisions to ease tax burdens and support recovery efforts. The economic impact of the pandemic led to discussions on long-term tax policies, economic recovery strategies, and sustainability measures to tackle future challenges. In conclusion, COVID-19 has both disrupted and innovated the tax and accounting landscape in Canada. Understanding these changes is crucial in navigating the post-pandemic financial landscape.